All right, I'm going to go over some problems that you're going to see, examples like you're going to see on the exam this weekend. And um, so if you can do these, you should be in um, pretty good shape. The exam consists of 20 multiple choice questions and four problems. Uh, I think the problems are doable, but then, as I'm always reminded, it's always doable for the professor. So, but I don't think they're overly um, difficult. I think they're in the medium range of difficulty for this. So let's go ahead and get through that. I think I've got nine of these for you, examples for you to look at. So the first one here is Rice Point Manufacturing Corporation manufactures three products in a joint process. Additional information is as follows. We've got the units produced, the sales value at split off, additional cost if processed further, and sales value if processed further. Okay, it says allocate the joint cost to the three products using the net realizable value method. All right. Um, so the first one, the sales value J, the first one is the sales value at split off is 150. The additional processing is 28,000, and so the sales value processed further is 170. So the marginal difference in revenue, 170 minus 120, is 20,000. The additional cost is 28,000. So this should not be processed further. So the net realizable value on J is 150,000. On K, we have sales value split off of 50 and sales value processed further is 80. So the marginal difference there is 30. The additional cost is 20. So our net realizable value is 60 on this one, the 80 minus the 20, 60,000. And then finally, L, the sales value split off is 10. Sales value of processed further is 20. The cost of processing further is 6. So 10 minus 6, it's positive to process further. So 20 minus 6 is 14 is the net realizable value on that one. And so our total net realizable value is 150 plus 60 is 210 plus 14 is 224. Grab a different pen here. All right. So allocate the joint costs. So on J, we will have 150 divided by 224 times the joint costs of 120. For K, we will have 60,000 divided by 224 times 120. And L will be 14,000 divided by 124, 224, excuse me, times 120,000. Okay, so that's going to be 80,357. Oh, by the way, these problems all come from old tests I've given in previous classes. So these are real problems that come out of real tests. The next one is 60,000 divided by 224 times 120 is going to be 32, 140. I'm going to round that up to 3. And then the last one is 14 divided by 224 times 120,000 will be 7,500. All right. So that's part one. And then determine which products should be sold at split off and which products should be processed further. We did that actually to get the net realizable value. K and L should be processed further because the marginal revenue is greater than the additional processing cost. J should not be processed further. It should be sold at split off because the cost of processing further is greater than the marginal revenue on that. Okay, so the next one, these Sharpies bleed through, so I have to have a blotter here. The next one, we have Patchett Inc. produces joint products, OP and Q, from a joint process. Information concerning a batch in May at a joint cost of $90,000 is as follows. Allocate the joint process using the physical measures method. So here we've got O is 1,400, P is 3,200, and Q is 6,400. Add that all together. And we get 11,000. All right. And so O will be 1,400 divided by 11,000 times the 90,000. Is going to be 11,455. Again, I'm just rounding up to the nearest dollar. And that's fine on exam. The next one is going to be 3,200 divided by 11,000. Let me see if a regular pen will show up. These Sharpies aren't showing. I think it's the paper. It's copier paper. So 3,200 times 1,100 times 90,000. And that will equal 26,182. Again, rounding up. Now we can see this is going to be double. So the easy thing to do is just multiply that times 2. And we end up with 52,364, right? But if you want to work it out the long way, it should work out. All right, so that's that. Oh, that's part one. Part two, allocate using the net realizable value method. Okay, so 70 minus 22 is 48,000. $60 minus 16 is 44,000. And 8 minus 4 is 4,000. Add these up. 44 and 4 is 48, plus 48 is 96,000. So the total net realizable value is 96,000. 48 is O times the 90,000. That's going to be half. 45,000, 44,000 divided by 96,000 times 90,000. It's going to be 41,250. And finally, 4,000 divided by 96,000 times 90. Is 3,750. Okay, so that's it for that problem. Using a Sharpie, you don't need that. Here's another one. Reed's Corner produces 3 products in a joint process. And we see here the units produced 4250 and 8. Sales value it's split off, additional processing costs, sales value of process further, and product joint cost is 300,000. Product weight in pounds. So 290 minus 250, our marginal revenue is 40,000 minus 18. So A is which product should be processed further. So O is yes, process further. P 70 minus 50 is 20,000 marginal revenue, 30,000 to process further. So we would lose 10,000 by processing further. So no on P, and Q 20 and 25 is 5,000 marginal revenue, 10,000 additional processing costs. So Q is no. We should not process further. Assuming the company makes the decisions that are in the best interest for overall profitability, what would be the company's gross margin? Okay, so we would have the only one we're going to process further is this one. So our revenues on B will be 290,000, or on part B. So O would equal 290,000 minus 18,000 would give us a net realizable value of 272,000. P, we're not going to process farther, so we're going to take the 50,000 as is, and Q, same story, not going to process farther, so we're going to take the 20,000. So that'll be a total of 342,000. I've already taken out the additional processing costs for Q. Now I have to take out the joint costs of 300,000. And so our gross margin would be 42,000 on that one. Okay, this one is one of the service department allocation problems. The Insurance Plus company has 2 service departments, actuarial and premium rating, S1 and S2. The direct operating for the costs, including both variable and fixed, are as follows: 50,000 for actuarial, premium rating is 40,000, marketing is 60, and sales is 70. Number one, how much total cost should be allocated to each of the producing departments using the direct method? Okay, so using the direct method, we've got 30 and 20 for S1, which is actuarial. And we've got 40 and 30. Remember, with the direct method, we don't pay any attention to those. So with number one, 30 and 20 is 60 and 40% of the total. So marketing will be 0.6 times 50,000 is 30,000. Then its own direct cost of 60,000. Oops, gives us 90,000. I'm forgetting one though, aren't I? We got 40 and 30 is 70%. So 4/7 times 40,000. I'm going to squeeze that in there. Is 22,857. Add that in there. 857. 112,857. On the sales, we're going to have 40%, 0.4 times 50,000 for the actuarial department. That's 2 divided by the 5, and that's going to be 20,000. And then we're going to have 3/7 times 40,000. That's going to be 17,143 rounding up. And then its direct cost is 70,000. And we add that up. We get 107,143 for the sales department. And then it says how much total cost should be allocated to each department if we use the step method or the sequential method. Okay, so premium is going to use 50% of actuarial, so we will allocate actuarial to the premium first and then premium to marketing and sales. So premium is 50% of the actuarial, so that's 25,000. Marketing is going to get 30% of 50,000 is 15,000. And sales is going to end up with 20% of 50,000 or 10,000. Okay, now the premium, we add its own premium rating, which is 40,000. That gives us 65,000 in the premium that we're going to allocate. Now we allocate it just like we did up here, except instead of 40,000, we will be allocating 65,000. So marketing will get 4/7 times 65,000, and sales will get 3/7 times 65,000. And so that will be 37,143. And sales will get 27,557. And then of course they get their own, which is 60,000 and 70,000. And we add that up. $107,857, not terribly different, a little bit. $112,143, so slightly different. Okay, and like I said, in the example problems for Chapter 7, you won't be doing the reciprocal on the exam, so I'm not going to go over that here. Okay, the next one is to prepare a statement of cost of goods manufactured and cost of goods sold. This, so I'm going to do it in one here. So we start with our direct materials. Our direct material purchases were 800 and direct material purchases were 850,000. To that, I add my beginning inventory. That's beginning direct materials inventory, which is 220,000, and I subtract the ending direct materials inventory, which is 155,000, and I get the direct materials used. Okay. And I get 915,000. Okay, so that takes care of our direct materials. Now, this begins our work in process. Okay, so we're going to add to the direct materials the direct labor used, which is 525. That's given to us above. And this is direct costing, so I have to add up everything that is manufacturing overhead. So factory rent is, and that's going to be 144,000. Direct labor used, we've already done. Factory utilities are, and that's 120,000. We've already done direct material purchases. We do have to do indirect materials. That's 106,000, and plus our indirect labor, which is 90,000. To that, we add the beginning work in process inventory. That's 160,000, and we subtract the ending work in process inventory. That's 128,000. And draw a line there, and that will give us cost of goods manufactured. Okay, so we start up here with the 915 for the materials, and That number does not look correct. Let me try this again. All right, that looks better. 1,932,000 is our cost of goods manufactured. To that cost of goods manufactured, I add my beginning finished goods inventory, which is 320,000, and subtract my ending finished goods inventory, which is 310,000. And this will give us cost of goods sold 1,942,000. All right. So you should be able to do one of those. All right. Next one up, we've got the Warren Company uses a predetermined overhead rate. So this is going to be job order costing or job costing. Overhead for the next 12 months is estimated to be 480,000. Jackson applies overhead as a percentage of direct labor costs. Direct labor costs are estimated to be 400,000 next year. So we take the 480,000, divide it by 400,000, and we get 1.2 or 120%. The overhead will be 120% of the direct labor cost. During the year, actual direct labor costs amounted to 520. So we take the 520 times 1.2. That means we applied 624,000 of manufacturing overhead to work in process. The actual overhead was 605, so we applied 624. Actual was 605. We can just do this, and that'll be 19,000 that we are over applied. Right. And then it says number 2, prepare the journal entries to close the accounts, assuming the over applied overhead is close to cost of goods sold. So if we are over applied, if I think back to this, got a T count. This is the actual. This is the applied. If we're over applied, we have to debit manufacturing overhead control, and we'll credit cost of goods sold. Remembering that cost of goods sold is an expense. Expenses increase on the debit side, decrease on the credit side. And so we actually made 19,000 more than we thought we did. So that's always a nice thing to go tell your boss, right? Okay, number 23. We've got Gill Manufacturing uses a predetermined overhead rate based on direct labor cost. At the beginning of the year, Gill estimated total manufacturing overhead at $1,050,000 and total direct labor at $840,000. In June, Gill completed job 511. The details of 511 are as shown. How much was the total job of 511? Okay, so we've got, first thing we have to do is calculate the predetermined overhead rate. So that's 1,050,000 divided by 840,000. That's going to be 1.25 or 125% of the direct labor cost. So now we've got direct materials, 24,500. Direct labor, we're told, is 13,000. Then we need manufacturing overhead, which is 13,000 times 1.25 is 16,250. How much was the total job cost? So we've got 750 there. $53,750 was the total cost of job 511. Okay. So this one is a weighted average question, weighted average process costing question. The Zachariah Company has 6 processing departments for refined sugar, affination, carbonation, decolorization, boiling, recovery, and packaging. Conversion costs are added evenly throughout each process. Materials are added at the beginning of each process. Now remember, when it says materials are added at the beginning, that's a sneaky way of telling you that materials are 100% there if it is a unit. Data for August is as follows. We have our beginning work in process, 3,000. Transferred in, same as started. That means our units to account for is 21,500. Ending work in process is 6,500. Units to account for is going to be 21,500. That means transferred out was 15,000, right? All right. So we've got materials and conversion. And so all they're asking for here is the equivalent units. Remember, materials are 100% there. They're added at the beginning or transferred in. If it's transferred out, we assume anything transferred out is 100% there. And conversion cost is told is 50% complete. So that will be 3,250. So we have 21,500 equivalent units for materials. We have 18,250 equivalent units for conversion costs. All right. And this is our last problem. So we've got job order costing, we've got process costing, we've got cost allocation. Let me check your book real quick. Okay, chapter 2, yeah, strategy, there's no problems. That's all conceptual. Again, there's 20 multiple choice questions, 4 from each chapter. Basic cost management, again, there's no problems there, just terms and concepts. So chapter 4 is job costing, you have a problem there. Chapter 6 is process costing, you'll have a problem there, and the cost allocation. So you've got one of these you've got 2 problems from. I think it's chapter 7, but I won't guarantee that. All right, so my number 11 here. The selected production and cost data for Riviera Manufacturing Company follows for June. And we see here the units to account for. This is already given to us. This is we've got 32,000 beginning work in process, 47,000 started in June, 79,000 units to account for. Completed and transferred out was 63,000. Ending inventory was 16, and units to account for 79. On June 30th, the mixing department's ending work in process was 80% complete for materials and 40% complete for conversion costs. The finishing department's ending work in process was 75% complete for materials and 60% complete for conversion costs. The weighted average method is used. So number 1, it says compute the equivalent units of production and conversion costs for the mixing department. All right. So we take our transferred out is 63,000. We've got 16,000 ending inventory, gives us 79,000. So our materials, if it's transferred out, it's complete. Conversion, same thing. If it's transferred out, it's complete. In the mixing department, 80% is complete for materials. So 16,000.8 times is 12,800. And so we've got 75,800 equivalent units for materials in the mixing department. Conversion costs were 40% complete. So that'll be half of that, right? 80 and 40. So 6,400. Let's just check to make sure. 16,000.4 times 6,400, 6,400. Okay, 6,9,400 is our equivalent units for conversion in the mixing department. Okay, then we've got to do part 2, which is the finishing department. The exact same situation, except now our completed and transferred out is 68,400. We've got 12,000 in ending inventory, units to account for 80,400. Again, that's all given to you in the problem there. If it's completed and transferred out, we consider it 100% complete. So 68,400. And in the finishing department, 75% complete for materials. That'll be 9,000. 75% of 12,000. So we've got 77,400 equivalent units for materials in the finishing department. And then we've got 60%. 60% of 12,000 is 7,200. And so we've got 75,600 equivalent units for conversion in the finishing department. All right, so that gives you an idea of what you'll be looking at on the test over the weekend. I wish you the best of luck, and I will be checking emails. So if you run into problems, if you would please, you have the fake test or practice test, lockdown browser test. It's just make sure lockdown browser works. Remember in your syllabus that you are required to be responsible for having a backup computer in case something goes wrong. Um, and so, with that, I will wish you the best of luck and hope everything goes well for you.